Can you really make money trading with just 1,000 rupees? It's a question I see plastered all over comment sections and forums. I mean, can a capital that small, what many of us spend on a single weekend, actually stand a chance in the stock market? So, I decided to put it to the test for 1 full week. In this video, I'm taking you with me. You'll see every single trade, every win, every gut-wrenching loss, and the exact profit I walked away with. Stick around, because the final number might not be what you expect. Section 1. The setup, the rules of the game. Okay, before we dive into day 1, let's talk about the rules of this little experiment. The setup couldn't be simpler. 1 trading account, 1 week, and a starting capital of exactly 1,000 rupees. That's it. No top-ups, no lifelines. Just me, this tiny account, and the wild world of the market. First things first, the tools. With a capital this small, every single paisa matters. Brokerage and other fees can eat you alive. So I went with a discount broker known for low or even zero brokerage charges on certain types of trades. Minimizing costs is everything when your profits are measured in double digits. Next, the strategy. You can't exactly buy and hold a blue chip stock with $1,000 and pray for the best. You have to be quick, you have to be nimble. So, I decided to focus purely on intraday trading, getting in and out of stocks on the same day to hopefully profit from small price swings. The plan isn't to hit home runs, it's to score small, consistent base hits. I'll be hunting for low-priced stocks with a ton of trading volume, so my 1,000 rupees can actually buy a meaningful number of shares and I can get out fast when I need to. But here's the most important rule of this whole challenge, the one that separates the rookies from the survivors: risk management. My golden rule was simple and non-negotiable. I would risk a maximum of 2% of my capital on any single trade. On a Roll 1000 account, that's a measly 20 rupees. If a trade went against me by 20 rupees, a preset stop loss would automatically yank me out of the trade. No questions, no emotions. This rule is my lifeline. It ensures that one bad trade can't sink the whole ship. So, the plan is set. Low-cost broker, a nimble intraday strategy, and a hardcore 2% risk rule. Let's see how this actually works in practice. Alright, it's Monday morning. The market's open, the account is funded with a crisp 1,000 rupees, and I'm feeling that classic mix of let's do this, and please don't blow it on day 1. As disciplined traders do, I let the chaotic opening hour pass and just watched. I was looking for a stock with unusually high volume that was testing a key support level on its chart. Around 10:30 a.m., I spotted a candidate, a small cap stock trading at about 50 rupees a share. It had pulled back to a price where buyers had stepped in earlier. The setup looked solid. I placed my buy order for 20 shares, costing me exactly 1,000 rupees, and immediately set my stop loss just below that support level. Total risk on the trade, exactly 20 rupees. I watched the price dance around my entry point. It tried to push up, failed, came back down, and then, bam, stop loss hit. Just like that, I was out. My very first trade was a loss, 20 rupees, gone. Account balance, R980. Not exactly the glorious start I had envisioned. Look, it stings, but that's the game. And this is a perfect example of why that 2% risk rule is king. A 20 rupee loss is a paper cut. It's annoying, but it's not devastating. The psychological hit is tiny, and I still have 98% of my capital to keep fighting. Lesson 1, served on a not-so-silver platter. Control your losses, or they will absolutely control you. Day 2, Tuesday, the first win. Okay, day 2, shaking off yesterday's little fumble. The account stands at 980 rupees, and the plan remains the same. Patience, discipline, wait for the A+ setup. Today, I saw a different pattern emerge, a breakout. A stock that was stuck in a tight range for over an hour finally started punching through its resistance level with a big spike in volume. That's usually a good sign that it's ready to make a real move. I jumped in as soon as it broke out, again with my 20 rupee risk. This time the momentum was on my side. The stock just went. No drama, no hesitation. About 15 minutes later, it tagged my preset profit target. Boom. I closed the position for a quick 40 rupee profit. Let's do the math. The account was at Rs 980. Add the Rs 40 profit, and the new balance is Rs 1020. We are officially in the green. It's a tiny win, but mentally, it's massive. It validates the strategy and proves that if you just wait for the right moment and manage your risk, you can win. Honestly, the feeling of a plan coming together is even better than the profit. By the way, if you're finding this unfiltered look at trading interesting and maybe even a little helpful, do me a huge favor and hit that subscribe button. It's a massive motivation for me to create more content that shows what really works and what's just hype. Alright, back to the week. Day 3, Wednesday, the roller coaster. Wednesday, the day the market decided to teach me a lesson about ego. With a little profit in my pocket, a bit of overconfidence started creeping in. And the market loves to humble a budding genius. The morning actually started great. I found a quick scalping opportunity and bagged a small 15 rupee profit. The account was up to 1035 rupees. I was feeling good, a little too good. Riding that high, I jumped into another trade that looked almost identical, but this time, it didn't instantly go my way. It started dipping, and that little voice in my head started whispering, "Don't worry, it'll bounce back." And then I did it. I got greedy. I broke my cardinal rule and moved my stop loss down to give it more room to breathe. Famous last words. Of course, the stock didn't reverse. It kept dropping. I finally panicked and smashed the close button, but the damage was done. A 35 rupee loss. This mistake was 100% on me. Let's check the balance. Rs 1020 plus that first Rs 15 win minus the stupid Rs 35 loss. And I was right back at 1000 rupees, square one. 2 days of hard work, wiped out by one moment of indiscipline. This was, without a doubt, the most painful and important lesson of the week. You can have the best strategy on earth, but if you don't have the discipline to follow your own rules, you have nothing. Day 4. Thursday. The comeback. After getting my teeth kicked in on Wednesday, my only goal for Thursday was simple. Follow the damn rules. No exceptions. My confidence was shaken and I was back at my starting line of 1000 rupees. But I had to remind myself that the process works, as long as I actually follow it. I became incredibly selective. I watched several decent-looking trades go by because they weren't perfect A-plus setups. Then in the afternoon, I saw it. A stock bouncing cleanly off a major moving average. A strong technical signal. I took the trade, placed my stop loss, and then, and this is key, I walked away from the screen for a bit to stop myself from meddling. I trusted the analysis, held my nerve, and the trade moved perfectly. As it neared a resistance level, I closed it. I didn't get greedy trying to squeeze out every last paisa. A clean 60 rupee profit. The discipline paid off. The account was now at 1060 rupees, a new high for the week. This day was such a powerful reminder that in trading, what you don't do is just as important as what you do. Not overtrading, not breaking rules, and having the patience to wait is the real secret to a comeback. Day 5. Friday. The final push. It's the last day of the challenge. The account is at 1060 rupees. My main goal today: don't do anything stupid. Protect the profits I fought so hard for. I told myself I would only take 1, maybe 2, absolutely perfect setups. The market was choppy, moving sideways without much conviction. I waited patiently for almost 2 hours. Finally, a clean textbook pattern that met all my criteria appeared. I entered the trade, risking my standard 20 rupees. The stock moved fast and within 10 minutes, boom, profit target hit. A quick, stress-free gain of 25 rupees. And right there, I made an executive decision. I was done. Done for the day, done for the week. The account was at a new high of 1085 rupees, and there was zero reason to get greedy and risk it on a final low probability bet. I logged out of my terminal, feeling pretty good about the week. So after one full week of trading with just 1,000 rupees, after the UPS, the downs and the emotional gymnastics, here's where we landed. The final closing balance is 1085 rupees. That's a total net profit of 85 rupees. In terms of percentages, that's an 8.5% return on my capital in just 1 week. Now, I know what you're thinking. 85 rupees? That won't even buy me a movie ticket. And you're right, it's not life-changing money. But that was never the point. The goal was to see if it was possible. And the answer is a clear yes. But the real value isn't the 85 rupees. It's the lessons I walked away with. Here's the real profit. First, it's not about the money. It's about the percentages. An 8.5% return in a single week is fantastic by any investment standard. If you can develop a system that consistently works, you can scale it from 1,000 rupees to 1 lakh or more. The principles are exactly the same. Second, and I can't scream this loud enough, risk management is everything. The only reason I survived this week, especially after my boneheaded mistake on Wednesday, was because of my strict 2% risk rule. My losses were always small and manageable. The one time I broke that rule, the market slapped me right back down. It's a lesson the market will teach you again and again until you finally listen. And finally, trading with a small account is one of the best educational tools out there. It forces you to be incredibly disciplined, patient, and selective with your trades because you literally can't afford to be careless. Every single decision matters. This week was a better trading education than any book or course because it involved real stakes, real emotions, and real consequences. So, back to the big question. Is it possible to make money with 1,000 rupees? Yes. But the real profit isn't the rupees and pays. It's the priceless experience you gain. If you're a beginner, please start small. Focus on protecting your capital and learning the process before you even think about making big profits. Master your rules and your emotions. That is the real secret to growing as a trader. Now I want to hear from you. What do you think of this challenge? Have you ever tried trading with a small account? I'd love to hear your story. Your wins, your struggles, all of it, in the comments below. And if you want to see what challenge I take on next, make sure you're subscribed so you don't miss out. Thanks for watching.